The new Trudeau government budget proposes to raise the rate on capital gains above $250,000 from the current 50% up to 66.7% if someone sells a secondary property like a cottage. That's got owners trying to sell now before the effect would come in, which should be at the end of June. Of course, the budget has to be passed first for that to happen. Let's bring in CTV Scott Hurst. He's in our national newsroom with more on what's going on here. Bit of a scramble we're seeing, my friend.
Todd, at the very least, lots of uncertainty for Canadians who own cottages and other rental properties, secondary properties, where they could be on the hook for tens of thousands more in taxes or potentially more than that. Now, I get a lot of people out there might not have too much sympathy for cottage owners, but as I mentioned, this could mean a lot more money in taxes. And of course, a lot of Canadians do own rental properties, secondary properties, or cottages. Now, let's break down what this might potentially mean. If you bought a cottage for $250,000 and sell for $750,000, the $500,000 gain is taxed at 50%, which is $250,000 in taxable capital gain. That's right now. After June 25th, if of course this passes, the first $250,000 is taxed at 50%, but anything above that will be taxed at almost 67% or 2/3. In this case, the taxable gain rises tens of thousands of dollars to $292,000. So some owners are concerned that they might need to sell their cottages now to avoid paying more in federal taxes, and potentially those generational properties could get hit the hardest with the largest capital gain. So Todd, the best advice right now, talk to a realtor or tax specialist before making any significant long-term decisions here, as we're seeing these numbers once again. That profit of $250,000 is taxed at 50% on the first $250,000, and then the rest is taxed potentially at this higher rate. And so these cottagers might be on the hook for tens of thousands more dollars after this goes ahead. Of course, as you mentioned, if this does eventually pass, the budget ultimately gets passed, Todd.
Yeah, we do expect that to happen because, of course, the NDP have a deal with the Liberals in order to prop them up, keep them in power. So possible good time to pick up a cottage. Maybe.
Potentially, yeah, that might be the silver lining in all of this for those looking to get into the cottage market. Now, there's been an overall slowdown in demand for cottages following an uptick initially after the COVID-19 pandemic, although there was talk of a rebound in 2024. So realtors say some owners, because of these tax changes, may rush to sell their properties before the new rules take effect exactly 2 months from now, and it could lead to more inventory and lower prices. But of course, Todd, there are other market realities at play here for current owners, current mortgage holders, and prospective owners. It is the high interest rates that have kept a lot of people on the sidelines for quite some time now. So silver lining, there might be more inventory in the cottage country market, which could mean lower prices. But of course, there are lots of other factors at play here. As I mentioned, higher interest rates as well, Todd.
Thanks for this, Scott. Good to see you.
Thank you. Have a great day.
You as well.